Morning, guys. It's a beautiful Saturday morning. The markets are closed, and so we know it was a hectic bullish trend this entire week. Which what happened last week, we would expect the market to just retrace. That's what we at least we were expecting from the weekly forecast. We're not expecting such a impulsive bearish momentum, right? But anyway, let's look at what the market did do during this past week. So this is US30 and this is what happened. If you remember this area right here, this is where the market opened on a Monday, and this blue line, right, this horizontal line, support line, that was our low for the previous week, and the market closed just next to it, just at the top of that support area, support zone. That's where the market closed for the previous weekend. When the market opened on the Monday or the Sunday 5, depending on which time zone you are at, it hit that low of the week, and it broke and closed and came to this area, this support area, bounced back, you know, unable to break that. It went down, broke the support area, right, closed below, came back for a retest, and then bounced back, creating another lower low, right, bounced back up to that area to test that supported resistance zone, and then came back to create another lower low, right. You can see now the market tried to come back. You can see that let me just extend that, try to come back after creating that low. It wanted to create another to come and retest that resistance area, but you can see now it created a higher low, because this low is higher, a lower high, man, not higher low, a lower high, because this high is lower than this one, so it created a lower high after creating that lower low. And if we look at that, we're able to draw this point and this point, giving us that we might be in a bearish trend. And then we could see after that area there, we had a, if we could zoom in, so yeah, we did have a hammer and then another hammer, and then that bearish engulfing string that we are going down, right. And then we did come and create another lower low, and upon that creation of the lower low, we shot up, come and tested that trend line, that downward trend line, unable to break the first time, came down, right, and shot back up to that resistance area, unable to break it. We shot about it, but that's a stop loss hunt, right. And then we came unable to break it. That this yellow line was the low of the week. We had already broken the low of the week. That was our first one. This is our second one, which we are unable to break the second low of the week. But you can see we came back for a retest. After that retest, we shot down, and I mean down, and you can see with that line right there, we didn't reach create we created newer lows, right, lower lows, but we didn't come to that downward trend line. And you can see now that the market closed, I'm sure it will be shooting with this area right there, came for, hit that area, shot back up. You can see also that area right there, it's a resistance area, came back to test that support zone, couldn't break close below, so it shot back up, and that's where the market closed for the week. Overall, it was we're in a bearish trend for the week. I was expecting for us to be in a, you can see that, I was expecting for us to be in a bearish trend, because last week we were in I was expecting us to be in a bullish trend, because last week we were in a bearish trend. Or if we're not going to be in a bullish trend this week, I was expecting us at least to be in a consolidation, because we had some impulsive downwards move the prior week, but that we just shot back down again. So yeah, nothing is set in stone in the markets. You just have to analyze and keep monitoring what's going on. So this right here is German 30 and or German 40. I mean, because I keep saying German 30, but it's German 40 because of the 10 added companies. The change wasn't that long. I guess the adjustment for me is so, and you can see there, right, when the market opened. Then we didn't, for this one, we didn't come close to our low of the week, but we did have like a sharp downward movement. Even though we didn't touch the low of the week, we did have a sharp downward movement. You can see first touch, second touch, third touch on that downward trend line, creating a lower low, and another lower low, right? But then we can see that every time the market reached this trend line, it bounced back up, and so we would expect the same here, where you can see that we had a bullish engulfing right there, and then another hammer, a doji undecided, and then we shot right back up, and you can see that this was creating a nice upward trend, right? First touch, second touch, third. You can see the market was creating a nice bullish momentum, which was this towards the on Thursday. This was on Thursday when the market was trying to create a bullish momentum for Germany. It couldn't come back to where we started, but it's a nice start of the week. And based on the close, we could see a nice sharp movement on Monday before maybe continuing the downward to try and test this trend line before shooting back up again. But yeah, this is mostly what happened. We were in a downward movement for Germany as well. If we are looking at gold, we can see that we had that area, right? The market, there's that gap between this was where the market closed on Friday, and this is where it opened on Monday. Tried to test our upward trend line, right? But it couldn't, so it closed just below it and then shot back down, creating that lower low and that another lower bar. But every time it created that lower low, it shot back up. You can see that the market shot back up. You can see that. And then after this one is short, we're expecting for it when it reaches here to shoot down, but it closed above, and then someone might see that and looking at a buy right here because it closed above, and that was a trend line where it closed below, so we're expecting a buy, and then we had that doge right there, and then a bearish engulfing, that one which that bearish engulfing right there, and it shot back. It didn't shoot a lot back down, but it did. Let's see. After that bearish engulfing, moved down by 11 pips, which is a lot, but based on depending on your the amount that you put in, right? And then it went back up, giving us that area right there where the market came for a retest, and then after that retest you can see that doge right there, and then the bullish engulfing, right, which then shot up, came to this area, but now we can see that the market was trying. When was this? This was also on a Thursday where the German was going up on a Thursday. Gold was going back down, retesting, coming back to retest this area for the Thursday, which it closed there on a Friday, but there was not a lot of movement. The downward movement for Thursday, as well as you can see also in Germany, there was for the upward movement there was not a lot going on. Right here we have US100, and you can see that US had the same market glitch. I call it a glitch, or the gap between the close and the open, which is why you should always close your trades on Friday, because you never know. You might have entered a buy here looking at this. It came close because this was our last week's previous low. You might look at it came to that low, it should bounce up because due to prior data, it always bounces back up when it hit that area, right? And you can see now that the market, if you had placed the buy here on the Friday when the market closed and the market opened there on a Sunday, you were to lose. So you always close your trades on Friday. Don't let them run through the weekend. Although unless you're analyzing from a weekly chart, the way you entered your buy on a weekly or on a monthly chart, then that's when you can leave them run through weekends. But if you're doing from 4 hours down to 1 minute, always close your trades on a Friday, right? Because if you're using a 1 week, I'm sure you're using a daily as your entry time frame. But yeah, you can see that it came. So this one tested our low of the week, and when it came, that low of the week was also combined with that downward trend. As you can see, that downward trend. So we had a strong support area with that downward and that low and that downward trend. So we expected the market to bounce back up, and it did obey that. What did it form? It formed a doji. We have a doji and then a bullish engulfing, right? A doji, as we know, it's an undecisive candle, and then we had a bullish engulfing confirming our upward trend, right? But no, it will not always be that case. As you can see, you've seen in gold in the previous one, right? And so yeah, that's mostly what happened with Nasdaq. If you can still look at Bitcoin, which crashed like. So this is where I was on Bit. Where was it? Is on. This is where we're looking at Bitcoin on the 12th, which was the Sunday, right? Yes, it was Sunday. The 12th was the Sunday, and we saw this, and we're like, the market should come back at least to this area, and then come back right here before looking for a buy, and it did come back to that resistance area, but not it didn't touch it. It came close to it, and then right gave us a that was a nice consolidation right there. And while it was building that, and it shot back down after that consolidation, which breaking our lows, broke that first low, the second, the third, and now it has it's Saturday. It's broken that one, which now we have like, let's take it to the 4 hourly just to see. So now if you no, I want to take it to the hourly just to show you guys the history of the. If you're gonna see this, the markets now it's reached that zone. This was the first high of Bitcoin, right? The first higher high. Now the market has closed or is now below that higher high, looking to close next to this other low. If it closes and breaks this last low, then we can definitely see that we are definitely in a crash. We would need some spectacular news for it to bounce back up to this area right here, which might take, with Bitcoin, the sharp volatility of Bitcoin might not take as much time, but we can see that we are where we were back in 2017. That's the current price where we are. That's when we were in 2017. So that's like, so that's exactly 1685 days, 87 days ago. That's when we're on this area. So that's really bad, and we are not looking in for going up anytime soon, because mostly if you look at areas like this in other charts, you'd see that the market always bounce back, but this time it's just going down, like going down. I don't think it would reach the flat out area, but we will just keep monitoring it, because yeah, with this downward trend, nothing is certain anymore. You just have to keep observing it. So it will make this obsolete, then that area as well. Right, those will be obsolete because those happened a long time ago, and this one as well, and this one. Yeah, so guys, That's us for the weekly review. Hope you enjoyed. Hopefully you were able to catch some of the bearish movements and you didn't lose a lot of money, and we learned from this. And also comment down below with something that you saw that I didn't see, that so that we can grow together and learn together and master the markets together. Well, not master, just learn and be able to spot more entries and grow in confidence in entering our trades and taking some of the positions that we take and the volatility as well. Yeah, but guys, peace. Enjoy the rest of the weekend, and we'll see you again tomorrow for the weekly review, weekly forecast. I mean, peace.